And thank you for joining us today as we talk about refinancing mortgages. As we're recording this today, interest rates are rising. And so questions are coming up as to whether or not refinancing still makes sense. The items we're going to talk about today are great things to consider no matter what's happening in the interest rate environment at all. Things could be going up or down. Really, it's important for you to look at your particular situation and say, all right, here's my mortgage, here's my opportunities. Is it the right thing for me to choose to refi? So let's walk through some of these criteria that are important for you to think about when you're thinking about refinancing your mortgage. Just in case you don't know where you are, this is DeDe Jones with Innovative Financial here to help you improve your financial life and make great financial decisions. So back to the refi of the mortgages. The first question is, are you going to stay in your home for a few years? If you know that there's a move in your near future, or if you're somebody who likes to move fairly often, refinancing may not make sense. We're going to talk about why in a minute, but really, if you're not going to stay put, go get a cup of coffee, have a break. The rest of this won't apply to you. So, what are the next things we need to talk about? So, some folks are approaching a milestone event. Maybe you have an adjustable rate mortgage, maybe you're about to retire, or there's a balloon on your mortgage. Things like that could be good triggers for you to consider a refinance. Definitely, regardless of interest rates. If your arm is coming to an end, that's your adjustable rate mortgage, not this thing at the end of your shoulder. If your arm is going to end and you're going to get a fixed rate, it's real important for you to look at what you're going to lock into versus what is available in the market. Even at higher interest rates, it may be a better idea to refinance. A balloon payment is where you've paid a flat rate or even possibly no rate for a while, then all of a sudden you owe the balance. You're going to have to look at refinancing there. But a biggie is if you're coming up on retirement or even a job change, maybe downsizing, it might be a really good idea to refinance while you can still demonstrate higher income levels and get that refinancing more easily. So, for those of you who aren't facing particular milestones, what are some other things to consider? Loan to value ratio. So, if your loan to value ratio is still high, it's probably going to be hard to refinance, probably expensive, and you might be subject to the dreaded PMI, private mortgage insurance. That's a fee that's layered on top of your payment to pay an insurance company who protects the mortgage company in the event that you fail to repay your loan. So, all came out of the 2008 stuff, but PMI is something that we'll talk about again. Other things you might be looking at, it might be a situation where your credit score has improved significantly. And as a result, you could be eligible for lower interest rates and perhaps lesser PMI. So if you've had a situation where your credit score is much better than when you originally got the mortgage, definitely worth looking into. If your current rate is fixed, really we're looking at how do interest rates compare. And if it isn't fixed, what's going to happen to your interest rate? So I alluded to that a minute ago, but if your rate isn't fixed and you see looming interest rate rises on the horizon, you might want to refinance into a fixed rate loan. It reduces your overall risk in your financial life because then you have a predictable obligation on your mortgage. So let's see. Can you qualify for a loan at a rate that is meaningfully lower than your current rate or removes PMI? So that's really the crux of looking at a refinance decision. The first thing I always encourage people to do is if you've got PMI on your loan, that's the private mortgage insurance, and we're in this crazy environment right now, we're recording this in April of 2022, where property values have appreciated significantly and wildly in some areas of the country, your loan to value ratio may have adjusted far enough that with a simple phone call to your mortgage provider, your mortgage lender, that you can have the PMI removed. That could be the help that you need, and you won't need to go through the entire refinance process, which is not easy and expensive. So that first phone call is if you're subject to PMI and your loan to value ratio has improved, give a call to your mortgage lender. We might want to talk about, what's the term you want to look at on your loan? Do you want to get a 30-year loan, keep those payments low, or do you want to be done with paying off your mortgage sooner? Shorten it up with a 15-year loan. Things to consider. Can you afford it? Or is there enough change? And for a special subset of folks out there, veterans, people who live in rural areas, and in some cases, actually folks with lower credit scores, there are special government programs that make available preferred products for people in those categories. So if you fall in one of those categories, definitely when you contact the mortgage lender, let them know that you're in that category. They've got USDA, FHA, and VA loans out there available for you. And maybe you're in a situation where the loan to value ratio has improved so much that you could do a refi, take money out and maybe pay off a second mortgage, maybe pay off some car loans, student loans, although that question belongs on its own video. So cash out is available to you. Now, remember, when you're taking more money out than the original purchase mortgage, there's some rules around the tax deductibility on that interest. You can deduct any mortgage interest that is for money that you're putting back into the home. So if you're doing a refinance to remodel, that's fully deductible. If it's for other purposes, then it's subject to some special rules. So at the end of the day, it's real important to say, here's where we are, here's what's our goal. Do we want to lower the payments? Do we want to shorten the term? Do we want to reduce how much interest that we're paying? Those different goals will inform the decision where you head. Again, I think the low-hanging fruit is getting rid of PMI if your loan-to-value ratio has improved a lot. But beyond that, we want to look and see what the costs are. The goal is to make sure it makes economic sense. The additional cost you pay for the refi, is it paid off with lowered payments within a couple of years, really? So just a quick rundown, when you do a refi, there will be sometimes, especially with your current mortgage company, where they will say that it's no cost. Well, it's no cost out of pocket. There's always costs associated with a refi. They may allow you to roll those costs into the loan, but there's still costs you have to bear. What kind of costs? Well, there's an origination fee, which can be as high as 2%. Generally, it's less than 1.5% of the loan. So on a $500,000 loan, 1% is $5,000 just out of the chute. Then there's other kinds of fees, such as application fees, origination fees, credit report fees, home appraisals, home inspections, flood certificates, title search, recording fees, and reconveyance fees, as if that isn't enough. Those fees will range from $1,000 to $3,000 on top of the origination fee. So you bundle all those together. Let's make our life simple. Figure it's 10 grand altogether to do the refi. How many months does it take of reduced mortgage expenses? So your mortgage went from, $3,000 a month to $2,500 a month. You're saving $500 a month. How many months does it take to pay back that 10 grand? So in this case, it's going to be 20 months. That might be the right answer for you. But in a lot of situations, you can't save that much on the new mortgage payment. That makes it harder to justify the refi. Everybody's situation is going to be different, and there's no hard and fast rule about whether or not you should refi. It's important that you understand your goals, your motivations, what you want to get out of it, and understand how the changing markets might affect you. If you've got more questions about refinancing your mortgage and how it plays into your overall financial world, let us know here at Innovative Financial. Thanks for joining me today. This has been DeDe Jones with Innovative Financial. Have a great financial day.